The biggest IPO in history just happened. SpaceX just raised $75 billion, debuted on the NASDAQ at $135 a share, and by Monday afternoon was already up over 35% from its IPO price in just 3 days of trading, crossing the $2 trillion market cap in the process. Wild. And right now, investors everywhere are rushing into anything that sounds like the SpaceX play. Rocket Lab, AST, Space Mobile, Intuitive Machines, stocks with space in the story are just flying right now. And here's the problem. Most of them probably shouldn't be. So today I want to answer for you the 2 questions that every investor is asking right now. First, should you buy SpaceX itself? And second, if not SpaceX, what are some stocks in the market that might actually be worth your time and money? And stay with me all the way through this because the 2 stocks that I'm going to show you at the end are not names you're seeing on CNBC right now, and that's exactly the point. Hi, I'm Jacob Wade. I'm a financial coach that helps high-income earners retire early, and if you like videos like this, just hit the thumbs up button below. It gives a signal to me to just keep making more videos like this for you. And remember, while we get into this, I'm talking about specific stocks and data here, but I'm not giving you personalized investment advice. Your investment decisions are yours, so always do your own due diligence before buying or selling any stock. Now, what just happened here? All right, let's rewind for a second. Let's just start with the basics because the numbers are genuinely staggering. Again, SpaceX priced its IPO at $135 a share on June 11th, which means they raised $75 billion in this single offering. And that makes it the largest IPO in stock market history. Bigger than Alibaba, bigger than Saudi Aramco, bigger than anything we've ever seen. And the company listed on the NASDAQ under the ticker symbol SPCX. And unlike most mega IPOs, which are dominated entirely by institutional investors, SpaceX actually did something quite unusual. They reserved 30% of the offering just for retail investors, everyday people like you and me. And that was deliberate because Elon Musk has always cultivated a retail investor following, and this IPO is designed with that in mind. Now, here's what most people don't fully appreciate about SpaceX as an actual business. So when you hear SpaceX, you probably think the rockets, right? Those are the famous part of the company, but rockets are actually not where the money is. Starlink, their satellite internet service, actually generated 61% of the total revenue in 2025. The company did $18.7 billion in revenue last year, and that was growth of 33% year over year. And that's genuinely impressive business growth, not just a cool space story. It's not just flashy because Elon, that's actual business growth. Now you combine that and then you add in massive Department of Defense contracts, ambitions in AI through company XAI, which is part of this, and Elon Musk holding a 4% stake worth roughly $85 billion, and you have a founder that's actually deeply incentivized to keep building this thing. So the business case for SpaceX is real. Nobody's disputing that part of it. The question is whether the stock at these prices is real. And that's where things get a little more complicated. And by the way, if you do like this type of breakdown and commentary on certain stocks, then you should know that this type of insight is what our editor-in-chief Steve Reitmeister does every Monday in his live weekly trading sessions. It's totally free to join. It includes some of his top stock recommendations. You can scan the QR code on the screen here to sign up for the next one. You can join us this Monday at 7 p.m. Eastern, or you can just go to wallstreetzen.com/live and sign up for free. So let's get to the question that you actually want to know right now. Should you buy SpaceX right now? I just have to be honest with you about this because this is exactly the kind of moment where retail investors end up getting hurt. SpaceX priced at $135 and it closed its first day at $161. By Monday afternoon, it was already trading above $184. In just a couple days of trading, the stock is already up over 35% from its IPO price. That's an enormous move in an incredibly short period of time. And here's the thing about chasing a stock that's up 35% in just a couple days. You're not getting in at that base price anymore. You're buying at the ceiling of an excitement wave. Now, as I record this right now, the stock is actually so new. It doesn't even show up on WallStreetZen yet. There isn't enough public market data to run it through our model. However, by the time you are watching this, that may have changed. So just look up SPCX on WallStreetZen.com or just scan the QR code on the screen here to go to WallStreetZen and just type in SPCX in the search bar, and that should be showing up very soon here. Now, what I can tell you is that there are already signals for caution about this stock. For instance, right now there's exactly one analyst on WallStreetZen that's covering SPCX. That's Keith Snyder at CFRA, and he initiated coverage with a sell rating at a price target of $115. That's nearly 30% below the IPO price and well below where the stock is trading right now. Now, if we zoom out even further on the valuation picture, Morningstar pegs the fair value for SpaceX at around $780 billion, less than half the IPO valuation. But if we want to look on the flip side here, ARK Invest projects SpaceX could reach $3.1 trillion by the year 2030. So the range of outcomes here is truly enormous. And here's the detail that didn't get a lot of attention in all the IPO excitement that was out there. According to SpaceX's own prospectus, the company has accumulated a total loss of $41.3 billion since it was founded back in 2002. So the only consistently profitable part of the business right now is Starlink. Rockets themselves are still a money-losing operation. So that doesn't necessarily mean SpaceX is a bad business. It just means it's an early-stage business, but with a $2 trillion price tag attached to it. There's a risk that most people aren't actually thinking about right now is the lock-up periods, right? Insiders, early investors, early employees are currently restricted from selling their shares of stock. And when these lockups expire, typically 90 to 100 days after the IPO goes live, a wave of supply is going to hit the market. And that's historically one of the biggest sources of post-IPO pressure on the stock price itself. So here's my honest take. The business is one of the most exciting businesses in the world. I can't argue with that. But the stock right now may be one of the most dangerous buys in the market. You're paying a $2 trillion valuation for a company that has lost $41 billion a year over its entire lifetime and only has one analyst covering it with a sell rating. So what's the smart move here? Just take SPCX and put it on your watch list. Let the analyst coverage start to build. Watch the Zen rating, right? And let the stock itself tell you when the risk reward actually makes sense rather than just chasing it into this frenzy. Now here's where it gets really interesting, because even if you agree with me that SPCX itself is too hot to chase right now, the temptation doesn't actually stop at that stock. The market is now rushing into an entire basket of SpaceX adjacent stocks, right? Names that sound like space plays, names that are moving fast, and names that are getting a lot of airtime right now. So let me actually show you what our system thinks of those most popular stocks. Now, our Zen ratings model puts each stock through a 115 factor review that actually finds the ones with the highest likelihood of outperformance. And the rating is expressed as a simple letter grade, A through F, just like school. And there are 7 component grades beneath that overall grade to let you dig deeper into a stock's specific strengths and or weaknesses. So let's look at Rocket Lab, for example. This is one of the most talked about space stocks right now. The Zen ratings is a C, which amounts to a hold recommendation. It's not the worst, but it's not the best. Next, let's look at AST Space Mobile, another name getting a lot of attention right now. Zen rating of an F, which amounts to a strong sell recommendation. This one ranks in the bottom 2% of all stocks in our entire database. There isn't really much ambiguity here. This is a strong sell. And here's a few more. Intuitive Machines, Zen rating, D. Redwire Corporation, Zen rating, D. And here's a detail that tells the entire story, actually. On SpaceX's actual IPO day, on June 12th, Rocket Lab dropped more than 10%. So did Redwire. The Procure Space ETF itself actually fell roughly 7%. So the market was selling all these sort of halo stocks to buy the real thing, to buy SpaceX. That is the halo stock trap in action. So these names ran up in anticipation of the SpaceX IPO, and as soon as SpaceX debuted and was actually listed, the money rotated out of all of those right into SPCX itself. So investors who chased the halo got left holding the bag. Now, does that mean these companies have no future? Not necessarily, right? Rocket Lab is a real business. AST Space Mobile has genuine technology. But right now, today, the fundamentals don't support the valuations. And our system is telling you that loud and clear. So the question is, are there any space economy stocks that our system actually likes, that rate well? Stocks with real fundamentals, real ratings, and a legitimate connection to the SpaceX story. There are, and that's what I want to show you next. And again, if you enjoy this kind of timely analysis, just hit the subscribe button below and make sure you hit that notification bell so that you're notified every time we drop a new video on this channel. All right, so we've established that SPCX itself may be too hot to chase, and the popular halo stocks around them are basically rated C, D, and F by our system. So where does that leave you? Here are 2 stocks our system is flagging in this space, pun intended, both with a Zen rating of A, and both with a legitimate fundamental connection to the SpaceX story itself. Our stock number 1 is Moog Inc., ticker symbol MOG.X. A. And I want to start with this one because most people have never heard of Moog in this context, and that's exactly the kind of opportunity our system is built to find. Now, Moog is a leader in precision motion control systems. For aviation, space, and defense industries. In plain English, they make the components that control how rockets move, steer, and stabilize while they're in flight. Now, their technology is embedded in launch vehicles and spacecraft across the entire industry. And here's the key connection to SpaceX. SpaceX just raised $75 billion. That money gets deployed into hardware, rockets, satellites, launch infrastructure. Moog is directly in that supply chain. So as SpaceX accelerates the Starship launch cadence and continues expanding the Starlink constellation, Moog stands to benefit directly from that capital deployment. And Moog has been called out as one of the biggest publicly traded beneficiaries of the SpaceX IPO itself, and our system agrees. Again, a Zen rating of an A, top 3% of all stocks that we cover. And what makes the grade profile itself compelling is how well-rounded it is. So our momentum grade is a B, safety is a B, financials are a B, sentiment is a B. There's no glaring weak spots when you break it down by components. So truly, this is just a quietly excellent business that most retail investors walk right past because it doesn't have Elon Musk's name attached to it, to be honest. Now, I want to highlight the risk. Moog is a defense contractor, which means it's exposed to government budget cycles and defense spending decisions, right? If Washington tightens the belt on defense, that's a headwind. But with SpaceX now a major force in both commercial and government space programs and $75 billion freshly raised to deploy, the demand picture for what Moog makes looks as strong as it's been in years. And by the way, if you do like stock talk like this, I want to once again remind you to check out WallStreetZen's no-cost live training sessions. So if you want to attend the next WallStreetZen Live, please join our editor-in-chief Steve Reitmeister on Monday at 7 p.m. He doesn't just talk about what he's buying, but how he's actually finding the stock, so you can do the same in the days ahead. So again, if you want more content like this, I actually strongly recommend just pause the video real quick and go to wallstreetzen.com/live or scan the QR code on the screen here and just register so then you can show up next time he goes live. All right, stock number 2 on our list is NVIDIA, ticker symbol NVDA. And now NVIDIA needs no introduction, but I do want to give you a reason to think about it a little differently today, specifically through the lens of what SpaceX just did. Again, SpaceX raised $75 billion, largest IPO in history, and a significant portion of that capital is actually going to be deployed into AI computing infrastructure. SpaceX acquired xAI earlier this year, Musk's AI company, which brought with it IT data centers, the Grok AI models, and enormous computing demands. Now, Starlink itself also requires massive processing power to manage a constellation of thousands of satellites. And of course, NVIDIA is going to benefit from all of that. Now, NVIDIA earns an overall A Zen rating, ranking in the top 4% in our 4,600 stock database, and it boasts strong component grades across the board. Sentiment is a B, meaning industrial investors are quietly building positions already. Momentum is a B, but NVIDIA's financials grade is truly the standout. It comes in at the top 1% of stocks tracked, the highest possible rating. Now, I want to call out the risk. NVIDIA is already one of the most widely held and widely discussed stocks on the planet. And at this valuation, a lot of good news is already sort of baked into the price. Any stumble in AI spending or the broader tech sell-off could hit NVIDIA hard and fast. But here's the thing. Every major AI platform being built right now runs on NVIDIA hardware, and SpaceX just added $75 billion to the pile of capital that's already chasing exactly that. So the runway here is pretty long. Again, everyone knows NVIDIA, but most people aren't thinking about it as a SpaceX play right now. And that fresh angle, backed by an excellent Zen rating, of course, is exactly why I want to bring it up. So there you have it, my no-frills take on the SpaceX IPO, a few days in, and some solid alternatives to watch right now. So what do you think? Are you considering YOLOing your life savings into SpaceX, or do you prefer a more slow and steady approach using a quant ratings system? I really do want to know what you think. Drop a comment below and let me know what you're planning to do. And if you like this video and want more timely stock news, be sure to watch our recent video about the big semiconductor sell-off. It's an interesting comparison piece and a story that's still playing out.